Good day, happy Monday, wonderful week to all. Please give me some okay that you can hear me. Loud and clear, perfect, thank you very much. How was your weekend, guys? Everything is snowy here. It took a lot of time to clean the driveway. So, great heat wave. Lucky you, Willem, lucky you. Lucky you. First snow for you as well, Danilo, right? Okay, so I feel not alone. Yeah, well, at least we can build a snowman. Kids are happy. I suggested to build a snow woman, but they said, nah, let's build only snowman. Well, kids, they still don't get it. They don't shovel. They do. Of course they do. That's my kids, Russian kids. In Russian kids, Russian families, kids don't have free time. Busy schedule from morning to evening. So that's true, right? All right, guys, so let's begin. A wonderful week to all once again. For all those who are watching that for the very first time, welcome to our family. Please go over the trading report, which you will get right after the live room. Okay, this report includes all the summary of the live room meeting. So the idea is very simple. You watch here the video, how to read this report. On the comment section, you would find a table which we prepared. This table now has the videos, direct access to the videos, the most important webinars, broken into subjects. You see, we keep improving, right? We always think how to make things simpler. Later on, you will find a watch list of the entire session. Basically, the idea is very simple. You click on the chart and it opens the you click on the instrument, it opens the chart for you, and we are talking about all of them, of course. You just click and wait for that to give you the chart. This chart basically explains what do we expect to happen, right? Where we are bullish, where we are bearish, and why. Basically, that's the idea. And on some of the opportunities, we know the targets in advance, which is helpful. Slightly above, you would find the explanation of each of the sections: Forex, indices, commodities, cryptos, and CFDs, once relevant, of course. And the short-term opportunities as well. Okay, so that's basically all. On some of the pairs, we have clear vision of where we are bullish, some where we are bearish, and some we are neutral. Some we are bullish for long term, but bearish for short term, for example. So it's important to understand, once again, it's not a replacement for the live meetings. It is a follow-up. Okay, so that's pretty much all. So let's begin what we are doing today. It's Monday session, so Monday is always slightly longer for us. Our idea is we go over the, just move that here. We go over the report and we follow up our plan. So the euro dollar is the first one. We were bearish at the beginning of the previous week, right here at that moment. Let me quickly remind you that was our case, right? And we wanted to go sell. We were aiming the 111, 110, which was not reached. However, what did happen in that case was the fact that daily completed a triple cycle. Daily completed a bullish divergence, and not just daily, but also weekly completed a bullish divergence. So what does all that mean? So is there no way we are going to visit on 111 or 110? Of course there is. But once the weekly becomes bullish, we automatically keep in mind that the daily might become a corrective cycle, meaning daily might be two ways or a range, right? That's the options for corrective cycle. So daily could do this, or we already have a false break on the top. We might bounce here from the top of this area, make a false break there, and keep moving inside the range for a while before it will continue if we are going still lower, or are we retracing totally upwards. So basically the bottom line for the long-term view, we currently do not have the synchronization, meaning the focus is on the short-term view, and daily required to be corrective cycle, meaning we can still trade that buys, short-term buys. Now let's examine that from this view. If this is to become a range, we have a false break here, which means we do want to break above this area, also to cross the top of the Bollinger Band, right? To create here some possible convergence idea, right? For our chart, in that case, very likely would become a cycle by itself, meaning we would have and face here some kind of situation like that. Okay, and that might go and create divergence here by this area. So generally speaking, our idea, the euro dollar is bullish for the short term. From here somewhere, yes, we can face and place that inside a range, but later we will still be looking for the next portion of buys. Make sense? Because the daily to be corrective cycle, when you draw these lines, you basically understand the entire picture, right? So we have to remember the bigger picture and trade it accordingly on the lower time frames. So once the 4 hour becomes a cycle and the 1 hour chart could confirm it, the first leg definitely is confirmed, right? With the bearish divergence. This could also be kind of confirmation, right? It could turn to be triple or maybe further special cycle. But once we're facing here the retraces, false breaks, and lower lows, it will be the time to possibly trade inside this range. Does that make sense, guys? Meanwhile, and until then, retraces are still a buy opportunity. Here we got a bullish hidden divergence. It is still a buy opportunity. If we get a corrective cycle, it is still a buy opportunity. If we are facing here some kind of a range, by the bottoms is still a buy opportunity, assuming that the leg itself would be a cycle. Okay. Willem, I assume this is only you guys. Do you see my lines drawn okay, or is there any problem with the connection or something like that? Or you see my lines and you follow up? Yes, Willem. So it probably is just you. I have okay from everywhere. So sorry. Okay, so let's continue, guys. So the euro dollar basically we're bullish short term, drops down. We will want to use that as opportunities for buys. Yes, so if we reach the top of this possible range and 4 hour confirmed by 1 hour chart provides us this to be a cycle on these two time frames, we can definitely look for the short term sells. Yes, but we have to remember that now the pressure is very likely to buy the drops. It should be safer. Why? Due to the sequence of the things we have from the daily and the weekly charts. Make sense? So that's our euro versus the dollar. Euro versus the pound, a pair that we have been bearish also for a while, right? Basically what happened was that the daily completed the triple cycle and a bullish divergence. We discussed about it on that's right here on these lows. We discussed about it in the previous week. This is the place that we can accept a corrective cycle after the triple, right? Corrective cycle could be 2 waves or a range. And here comes the issue with the bearish pressure as for now. Take a look what happens. This is our triple cycle. So we could accept the corrective cycles all the way up to 50%, right? Even 61 could be in play, no problem, but it has to be respected. Now look what happens in that case. It's a 1 straight leg, not 2, because corrective cycle is 2 waves or a range. 1 straight leg going through the Fibonacci levels. That's by itself is a warning sign, and we have to remember that the bearish setup that we wanted for the long term now becomes not valid. Why? Because we lost the synchronization of the flow of the things between the weekly and the daily. And this is a sign where the long term is irrelevant right now. Now we've been bearish here for a long time, right? Now it's time to be careful. Definitely not for sales. As for now, nothing synchronized, which means we have to be very careful. So what do we have on a daily? We still have the triple cycle. We still might get 1, 2. It could be extremely ugly, or we still might face a false break, and move inside some range before possible further continuation. This is yet a possibility, right? But we can't now, because we don't have the synchronization from the higher time frames, we can't now know which of the scenarios it would be. So we can go and trade these scenarios if they are suitable. Currently, the 4-hour chart, assuming this is a possible range, does not provide any clear cycle here. One straight move without two candles retrace. What do we do in such cases, guys? Big X. This, from my point of view, is a neutral conditions. Now we can look to trade that on the short term, right? So basically ignore the daily and the weekly and start looking for synchronization between the 4-hour and the 1 hour, for example. So if this 4-hour would become something like that, right, 2 waves, and we get some divergence here, and the 1-hour chart would fit in as a cycle, we can go and try to short-term sell. Yes, we can, right? And same alternative, of course, right now, because if it makes this, and it's bullish hidden divergence, and 1-hour chart fits in, yes, this is a short-term buy. But it is short-term without a clear picture from the higher time frames, without clear cycles in play at this moment between the higher time frames, meaning that would be aggressive approach, which means simply small risk, right? And short-term trading. So euro pound, basically neutral for the long term, nothing clear here. For the short term, acceptable for both directions to be traded, and it has to be synchronized from the short-term time frames. Okay, questions? Yes, no, maybe? Wonderful. Next one on the list is the euro versus the yen. This pair does not have any clear cycles at the moment from the higher time frame, not weekly, not the daily. Therefore, our plan is according to the divergences. The last 3 that we have here is a bearish hidden divergence. And the last one on the daily was bullish divergence. Sorry, not here. Sorry, here. So we lost the synchronization once again. But according to weekly, we are still after rally. So the daily should become bearish again, meaning the daily could make for us something like 1, 2 bearish divergence and a sell. The daily could become a ranging cycle. So let's say something like a false break and a false break, and again sells, right? Or the 4-hour could become corrective cycle, and the 4-hour did. So this, meaning that for us, we are after sells. The weekly direction is stronger than the daily, right? And the daily could become by itself a bearish divergence, or the 4-hour to complete a corrective cycle. And 4-hour did complete a corrective cycle. So the euro versus the yen, we will want to find clear setups for sell. Okay, so we are bearish here. That's the bottom line. Could that push slightly further so the daily makes the 2 waves? Of course. Could that push slightly further so the daily makes a range? The answer is again, of course. We just explained the range scenario. Will that change any of the setups for sell? Of course not. So the safest approach in such case is to get clear cycle on the 4-hour and confirm it on the 1-hour. Once you have this confirmation, you confirm that there is some money flow on the market, on this pair. If you cannot confirm that, there is no money flow, and you would be exposed to zigzags, back and forth, back and forth, back and forth. Kind of pain in the complete the sentence. Okay, so that's for the euro yen bearish, but don't force. Wait for it to be clear. 4 hour to be cycled, confirmed with the 1 hour. And by confirmed, that means you would want them both to point in the same direction. You would want the 1 hour to be cycled by itself on each of the 4 hour chart legs. Once you can confirm that, that means you have a flow of money. If you can't confirm it, you are basically in front of randomness. Randomness in terms of what of the power in the market, bulls or bears, will take the control from here. Okay, that's the importance of the synchronization. Euro versus the franc. Long-term bullish, short-term bearish. This was the plan. This remains the plan. The idea of the long-term is still coming from here. Triple, which we expected to be a double. The idea for the short term derives from here, that if this is a false break and this is a false break, that's a possibility of a ranging cycle as well, right? So these two waves have to be cycled by itself on the 4 hour chart. We dropped to the 4 hour chart in that place. The first one was a cycle, and it's pretty clear here with this divergence. The second one never was a cycle. We don't have here nothing. So that's where basically we expect this to happen, double bottom or slightly lower until the next divergence forms, right? But this was basically where our plan is from the next week, and our plan still is the same. Invalidation would be this trend line. Why this trend line? Because according to the daily, this is the double wave correction we currently have. If it's broken, that means we are building now the second leg from the daily. As long as it's holding, our short term is still a bearish idea. Okay, so in that case, the best thing to do, as you know, is always to confirm the 4 hour and 1 hour together. They have to point on the same directions. Once you can confirm that, start to do the reversal signs, basically creation of lower lows, bearish divergences, right, and so on. That's for the euro versus the franc. So we are bearish on the short term still, and long term, well, we would want to go for buys. Yes, still assuming the daily to be two waves or continue to move inside this range. But once we would be here, we would be looking for buys again. Meanwhile, we are still short term bearish. Euro versus the Aussie. Guys, by the way, I know I'm a big talker when it comes to Monday because I have a lot of things to discuss about, right? Plus, it was also weekend with the family, which means only the wife was talking. So now it's my turn to talk. No, just joking, of course. But it's Monday session. It's the longest session, so I have a lot to discuss. If you have any question about any of the instruments, just write down, okay? But please do it accordingly. So don't start talking, Vlad, what do you think about dollars are now? Or Vlad, what do you think about pound franc or gold before I reach that? Okay, so let's do it step by step, please. So if you have any question about anything I talked about until now, drop it so I can reply. Okay, but ask. I always say that, and I mean that. Ask, guys. If you don't ask, that means you understand everything, which couldn't be the case. Otherwise, you would not be sitting here most likely, right? Or you just try to digest everything and try to find a solution with yourself, which might be keeping opening for some mistakes. So ask. If anything not clear, ask, guys. You ask, I can answer. If you don't ask, I don't know where the doubts might be coming from later on. Euro versus the Aussie is our next pair. To make it very simple, we are bearish. To make it very complicated, we will dig into the short term now and explain the differences. Why are we bearish for the long term? Because we are facing here the triple cycle. We did have two false breaks. We have the divergence. We expect a corrective cycle. Corrective cycle could be 1, 2. Corrective cycle could be a range, but the bottom line is we expect it to reach the Fibonacci. So we have a room down. Fact, bottom line. So that's for the long term. In that case, daily has to fit in as a cycle, right? So daily is now building leg number 1. Why it is a leg number 1? Because we never have any ending divergence here. So this should be a leg number 1. This should be some correction. This should be leg number 2. So far, so good. Now look what happens. We reach the clearance zone. Remember the clearance zone? I always love to mention. It's easy. On the last rally and the current market price, you are looking on the previous trend was up, and you are looking on the closest low possible for you. Now this low has to be ideally be created after a cycle, so not just a low, but after a cycle. This was a cycle here, and you can confirm it, of course, on the lower time frame. Now this becomes a money place. Money place meaning a lot of traders protect this area, meaning start to buy somewhere here or here or here or here. Why they start to buy here? Because let's face it, what is the human logic in such case? How serious can that really drop? It has to correct sometime, right? Normally 99% of the traders start the attack extremely early, and the moment they give up and they get disappointed by the failing attacks, that's where the retrace would actually start from, right? At the moment that traders give up, that's where the real money start to place it. So look on the beautiful thing that happened here. We reach the clearance zone, we cleanse the stop losses of the early attackers. If this is the first daily leg and now we are in front of a corrective cycle, then we expect the second leg. If this is the first leg of the daily, it has to be cycled by itself on the 4-hour chart. First leg is a cycle, correction, right? Second leg is a cycle, correction. Third leg is a cycle. So basically we have a trio on the 4-hour chart, and now we have false break, convergence. So all those traders who started the attack here and here and here and here and here and here and here are the same ones that believe that there should be retrace, and yes, there should be retrace, but never watched for a reversal sign. Reversal signs begins with false breaks. If we are with the higher time frames, then false breaks are enough for us. If we are against the higher time frames, then we would want to confirm a retrace, meaning higher highs, or at least the structure of 1 correction, 2 correction, breakout, right? The same structure that builds a possibility of a corrective cycle to begin. The same idea of triple double, because after this breakout, we might get towards correction and continuation, or a pullback and continuation. But at the moment that we have 1, 2, anytime it could break down and continue lower. If it doesn't break down and alternatively break up, that makes it a further continuation and a possible retrace, reverse. So we don't have that on the 4-hour chart, but if the daily was confirmed by the 4-hour, we can take a look on the 1-hour, and on the 1-hour you do have this structure exactly. So this was 1, this is 2, and you get the breakout. So far so good. So we have the okay for the short-term retraces, meaning we are into corrective cycle right now. By ideal, we should be facing double wave cycle somewhere towards 115,850 up to 160. This should be the ideal place. It will very likely be place of trend lines and resistances. For all those of you who love these terms, resistances, supports, and all these kind of things, right? Pivot points, all the possibilities around. I am looking at everything in terms of cycles. As you know, it does not mean that the rest of the things not good. They will be synchronized inside. So for all those of you who are looking for these terms, remember these are the places where you would want to watch them. Again, based on cycles. So Euro Aussie, long term is definitely bearish for us, but the short term now has the signs of that correction. Drops with bullish signs are for a buy. Is that okay, guys? Do you see the understanding and the difference of the things? Try to make the flow of these things easier for you. If this is your weekly, you would expect now a corrective cycle. So something like that, right? Based on your weekly, correct? You drop to daily, you have to confirm that. So the daily should be, if this is your first leg of the daily has to be a cycle by itself on the 4 hour. Drop to 4 hour, confirm the cycle, and you get this picture. So basically drop this line just to train your imagination, right? And try to fit in your cycles inside that. Okay, and then when you have this picture, you always remember what and how you want to trade it. It should be a bit easier to face with that live. Questions about this one? Euro Kiwi, same story exactly. According to the weekly time frame, we are here. Moreover, the weekly now has a convergence. Could that be better? No, we expect this. What do we do from this moment? Going to daily chart. Daily should be first leg. Daily is a first leg, and it has to be a cycle by itself. We drop to lower time frame, we can face a cycle here. Well, yeah, it would be tricky, but it's pretty much this. So we're facing here a false breaks idea once again. Right? And we have this is the second false break, not with this high, but with this high. And now we are building here the higher highs. So pretty much the same idea. Ideally, we should be facing the corrective cycle all the way to the levels from the daily, because this is our first leg, the daily. 4 hours is just a confirming cycle to that, right? So the daily, we want to reach here 170 and northern. No guarantees for that, because it could be also the blocking on the second leg here. So that could be it. The beautiful part is the 170 is synchronized for both cycles. This and this. A very powerful synchronization zone. So again, by ideal, we should be reaching here. So drops to look for buys. Don't attack automatically. Oh, now it is. Remember, you are still against the higher time frames. It's very important to remember that, because when you are against these time frames, it's time to be more careful, meaning apply more approvals. Don't find yourself in a place where you try to convince the market that you are right. Don't forget, higher time frames are still bearish, so bears could control any moment. By idea, we want this correction to happen. It doesn't mean it will. If this correction will happen, we know how we want to sell further on, right? Don't forget that. To trade that means you are in much more aggressive approach. Okay, very important to remember that. That's a good question, Catherine. Since this is so similar to the Euro Aussie, do we have any preferences to any of these? Well, to be honest, for me, the Euro Aussie is more attractive. The Euro Kiwi is more attractive for the reason that the weekly has a convergence. So sell these rallies are much more attractive for me than the Euro Aussie. To buy, I would say also probably Euro versus the Kiwi, even though Euro Aussie has clearer setups on the 4 hour chart. Euro Kiwi tends to be more dramatical and react stronger. We also have a 20 candles right of the moving average, So altogether puts a good pressure here. We also have a double duplication here. And I do love this clearance zone. It's a very powerful clearance zone. On Euro Aussie, we had to approve this area, the clearance on the 4-hour chart cycle. Here we have a daily cycle that's pretty much stronger. So for me, it's Euro Kiwi. Of course, I might be wrong, but once again, very important thing is to remember, we are still after sell these rallies, right? Because what when I sell rallies, what does the majority of the community here? Oh, okay, so it's now rallies. Let's buy them, right? That's normal. I say sell the rallies. Everyone here. Oh, okay, so let's buy the rallies. There have to be rallies, right? That's a very normal human thing. You have to remember that, and I have to be very clear here, and you have to understand why. Okay, sell these rallies still considered to be much stronger. Will these rallies happen? We don't know, but we do know what do we want to do if they happen, and that's why I always say you prepare your plan. Call it analysis, call it preparation, call it a plan, call it whatever, and you have to follow it and respect your plan. Good. So that's for the euros. Now there is one more euro versus the CAD, which is bearish for us for the long term. Once again, let me quick repeat why. Due to this triple cycle, I would expect 1, 2. So meaning weekly has to fit in. Weekly, unfortunately, was bullish, so against the monthly, right? So we are waiting for what? For that to become bearish again. How that could become bearish again? For example, retrace and bearish hidden divergence. Will that happen? And we don't know. The option set number 2 is some kind of a range, right? So a range and then continuation down. Will that happen? We don't know, but we do know what we want to do if that happens. This is what we call prepare your plan and then trade your plan, right? So plan your trade, trade your plan, you know this saying. Meaning that the weekly is still inside a corrective mode. So the daily should provide range or 2 waves. Does the daily have a range? Not yet. Does the daily have completed 2 waves? Not yet. Therefore, the euro versus the Aussie, the Canadian, sorry, is bullish again. Now, previous week we were neutral for one reason. It was stuck within these 2 candles for too long. Now it's breaking up. Therefore, the second leg is gaining its momentum. So we are waiting for that to form. These two waves complete here some kind of a range. This is a possible descending channel. 4-hour will have to be a cycle by itself on the second daily leg, and it's not yet the case. So once it does make something like that, and if it does something like that, we can start talking about further sells again. Meanwhile, on the short-term view, aggressive view, it's still bullish and buy retraces. Does that make sense, guys? That's the flow of the things. Okay, so we want to see the correction completed. If the correction completed upside, we know we will be back to the longer terms. Meanwhile, because we don't have that completed, we assume on the aggressive approach, of course, that this is still in the creation. So short-term aggressive, we can still trade it for buys. So EuroCAD, short-term, aggressive, small risk, bullish. Matthew, what would you have to see for a short-term buy on what of the pairs? I'm not sure your question refers to the EuroCAD now. So please let me know on what of the pairs you are talking about. Matthew? Euro Kiwi. Okay, thank you. Euro Kiwi, Euro Kiwi, Euro Kiwi. Here. So Euro Kiwi, after completing the convergence, basically on the 1-hour chart, any of the corrective things, 2 waves, range, or bullish hidden divergence. If it's bullish hidden divergence, you have to confirm that on the lower time frame to be with you. If it's 2 waves on the 1-hour chart, and each of these waves has to be cycled by itself on the lower time frame. So basically, what we call validation. right? Just validate your pullbacks. But again, you have the conditions here for the possible buys. So you got to retrace, and your systems or strategies that you use provide you the buy opportunities. Then you have to confirm it and validate it based on the system rules. If, for example, you use the delta, you have to validate it by the delta. If you use SRS, by SRS, triple B, right? Any manual strategies, then manual strategies. It doesn't matter. But you have the validation for short-term rallies from the 4-hour chart, right? So now you need to validate your entries, and the entries are based on the strategies you use. So far, we are validating only based on the flow of the money, basically the cycles principles, right? Why do we validate it this way? To validate the direction we want to trade. After we validated the direction we trade, we want to trade it. And trading part comes from the strategies. If it's manual, if it's systematical, if it's robots, if it's whatever, it doesn't matter. It doesn't matter. What does matter, you value your directions in validations, right? Until when your setup is valid, what do you want to see, and until when from when it becomes not valid. Good. So Euro CAD we covered, and we are done with the euros. Okay. Next ones. Once again, guys, I'm sorry it takes time, but we have to explain everything so you know how to digest and how to work with that later. Pounds. This will be simple. This will be very simple. Neutral. Okay. Completely neutral. I explained the euro versus the pound. Pound franc also, it's complete mess, and I will explain. According to the monthly, this is what we call a scream, right, of buys. It's simply screaming buy, 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 buy for pension. But since we are not here investors for pension, very likely, right? Or even if we plan to go long term, very likely we come back to that tomorrow or in a few days to check where are our positions. So let's face it, we are not so old in our mind to trade for pensions, or we're not so rich to trade for pensions yet. As per short term, weekly must fit in with the monthly. The weekly does suggest triple cycle with a bullish hidden divergence, meaning we are good for buys, right? It never had any ending divergence, and it still could do that, right? But our idea is buy, buy, buy. Now the problem comes from here, because the weekly turned to be a bearish hidden divergence between these two highs. So weekly now becomes against the monthly, right? This is a bearish hidden divergence here. Daily confirmed that to be bearish with this divergence. We spoke about it on the previous week, and we said, okay, so we are bearish here, but due to all the sensitivity around the Brexit and the fact that every single day we are facing some new scandal, new rumors, new blah blah, right? This is basically unstable, not really technical. Some of the moves to happen still random. So we must make sure that weekly fits in the monthly. Currently, weekly is against. If the weekly is against, we have two options. Option number one, wait until the weekly becomes bullish. Option number two, let the daily, because this is the next following time frame, let the daily complete a corrective cycle, right? And then the weekly is back to bullish. If the daily is to complete corrective cycle, that means daily should make two waves, or daily could be in a range. As for now, both options are possible. If the daily is to complete the range, then the 4-hour must be a cycle by itself. And the 4-hour does look like a cycle by itself. It looks good. So that could become a very possible range with a reversal here. Does that make sense, guys? So basically the pound versus the franc, as simple as that, currently could be traded only on the short term. And yes, it could be traded in both directions, of course. The short-term rallies, if this cycle completes, And after that, the possible sells within the range or to complete the daily 2 waves. Both directions are tradable. What we do need to do in that case is to synchronize weekly, 4-hour with the 1 hour. And once you get the combos, that's your possible trading. Make sense, guys? So that's for the pound franc. And for long term, currently it's neutral in terms of synchronization. We do not have the synchronization. Therefore, long term is untradeable. Only after the daily would complete its corrective cycle or weekly will become bullish again, we will become buys again. Ideal scenario in that case would be here. That would be simply ideal. If that could happen, that should be yummy for 2019. Personally, I think this is what we are going to face next year. We might get that maybe even like slightly lower like that, or right, but this will be an amazing scenario, and I believe this could happen. I personally wait for that to happen. Okay, personally I do wait for that to happen. If it does, I know what I want to see on a daily chart, and you know what I want to see on a daily chart. I want to see like the weekly leg to be a cycle by itself on a daily chart. That's what I want to see. If I see that, you know what I'm going to do. I'm going to trade it. I'm going to buy that, and I'm going to hold it. Okay, this year, I did the same exactly with natural gas, as you know. We are talking about that for a while. We started that on February. We got ready for that, remember when? From previous year, end of previous year. On the February this year, once we got the false breaks and we turned around, sorry, that's not this year, this is this year, right? At that moment, we turn around after the 2 waves correction. We confirm it on a daily chart, and boom. Patience does pay off. Same will happen with pound franc later or sooner. So have your patience, guys. Have your patience. Once these things happen, they are so sweet. And I always say it's enough to have 1 or 2, ideally more, but it's enough to have 1 or 2 such long-term opportunities to make the entire year to look amazing. And you don't need many of them. You don't need many of them. So pound franc is building some monster for us. Yes, it could take time. Another opportunity which is building a monster is silver, but we will discuss about it later. Okay, so back to the pounds, pound franc, short term, both directions are acceptable. They have to be synchronized, 4-hour and the 1-hour chart. Pound versus the yen. You know what? Sorry, let's go to pound dollar first of all. Pound dollar, now this is for me neutral, and I will remain neutral. I'm not bullish and I'm not bearish for one reason. Weekly is suggesting a double bottom with a possible bullish divergence to hold. Daily suggests possibility for the same. I do not love the fact we are stuck not within 2 candles, but within 1 candle. I don't love that. For me, this is a sign of lack of money, meaning the big guys are not here. Okay, the big guys are making probably their purchases for Christmas. So pound dollar is neutral for me. I have no directions. I would not be dealing with that even on the short term. Why? Because we have too many signs and the level is ugly from weekly and the daily. We are right on the bottom, not even in the middle. So I don't love to deal with such things. For me, pound dollar is completely neutral. I don't know how to trade in such scenarios. Maybe someone does. I don't. So for me, it's neutral. Next on the list, pound versus the yen. The last divergence from weekly is bearish hidden. Last divergence from the daily, the one that we traded before, was bullish. Now it stopped and become bearish as well. So the last divergence is bearish here. Pound yen is bearish. Short term with these stops as invalidation. As per cycles, we have nothing clear. I would even say most likely we're in a bearish cycle for one reason. This could become a triple double. So if we break through, it could become some sexy move. Still early to decide. Anyway, pound yen short term bearish. Sell the rallies. Pound versus the Kiwi. Long term triple cycle from the weekly should be a corrective cycle, meaning 1, 2, or a range. Both possibilities are still in play. This is for the weekly. Daily is a straight leg down. Actually, it's 2 legs down right now already. This is first correction and currently in the second. So the daily has to be ending cycle, meaning divergence. We don't have any, right? If the weekly is bearish divergence, daily should be corrective cycle. It's not over. So watching on the 4-hour chart observation, we are after sell the rallies. So pound Aussie should be sell, pound Kiwi should be sell the rallies. Okay, very simple. So this is bearish. Short-term retraces could happen, of course, as we have the levels, right? And this would be also a level. So short-term retraces are acceptable, but this is still bearish. So sell the rallies. Pound versus the Aussie, pretty much same idea. Honestly, I like it less, and I will explain. The level by itself is much shorter, the cycle by itself, and we are very close to 50. I like it less. Daily provides a possibility of a bullish divergence. You see that? That makes it tricky. So pound versus the Aussie could become a corrective cycle on the 4-hour chart, meaning we can now face 1, 2, or we can dance in a range. A pound Aussie is acceptable for short-term retraces up, which I would avoid, and very likely we should be facing some kind of attempt to push lower. Ideally, we should clear the stop losses which are located here. From there, yes, I believe this divergence would pop and we are going for buys again. It's too early to decide. So meanwhile, pound Aussie, sell the rallies. And the other one, which I do not have a read of, this is pound versus the CAD. The reason, we do not have clear cycle from the weekly. Another reason, we are stuck within one candle in the day. For me, like the pound dollar, neutral. So the pounds that, from my point of view, are clearer to work with, that's the crosses versus the Pacifics, and I would be paying attention for pound yen, which is the only one that has kind of synchronization between the divergences. Questions? Wonderful. If you have, guys, write it down, please. Next one's on the list, dollar pairs, dollar versus the yen. Previous week, we were talking about our view. Our view is bearish. Now, we would expecting a sell from this area of a possible double top or slightly higher, 115, 116. But as you remember, our plan was sell, 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 sell. Only sell, and doesn't matter if we have a new high, we are on the place where we want to go for sells. Reason, weekly is bearish divergence, daily is bearish divergence. 4 hour was a bearish divergence. So everything was synchronized for us for a sell. If you remember previous week, I explained the structure when we were talking about the 1, 2, which could become a continuation, or if it breaks this down, it opens the room for further continuation. And we don't know if this could become a special cycle or a triple cycle. We don't know ever in advance how deep could that be. So once we got this structure on a previous week, this was our time of the attack. And this structure was right here. 1, 2, and we broke this area. So we got this pressure, we said, okay, sell the rallies. Sell the rallies means two waves range or bearish hidden divergence. In that case, we got a bearish hidden divergence for a continuation. So we are holding the structure of lower highs. We are holding the structure of lower lows. To make it simple, dollar yen was and remains bearish for us. And for all those of you who are riding that, don't forget, all that derives from the weekly. So our target, our destination target is possibly the 111, 110, ideally even something like 109. Now we take this possibly developing cycle, and this is our magnet. That's the next magnet. There is a fighting zone here around 112, which we do need to pay attention to, because on the short term, this could be a fighting area. And if we do get a bullish divergence here, we currently don't have, okay? So that's why I say, if this would become a bullish divergence here, it's something to respect on the short term. It might cause retraces, which we will want to go and sell. But the bottom line, we Warren remain bearish, we have a room for that. Next one on the list, dollar versus the franc, finally became bearish for us. We were bullish on the break of these two waves, and we said we remain bullish until the moment we will get our false breaks completed. So we got the false break completed. At that moment, this became a cycle, right? From the daily chart, confirmed with the false break, and the one hour chart provided us the false breaks and the convergence principle. Sorry, the full convergence. At that moment, dollar franc became bearish for us. Previous week it was for short term because we were expecting two waves and possible continuation up, but instead it did the same like dollar yen. 1, 2, which broke the low and broke the divergence. From this moment, no divergence, nothing preventing that from continuing lower. So we're back to the roots. Weekly became a bearish divergence, meaning it became double cycle. So daily is the one that has to be corrective cycle. So now the short term turns to be a longer term, and daily should become the corrective cycle. So you see, guys, what started previous week as short-term retraces acceptable down, now turns to be 1, 2, and breakout. And now, who knows how deep that will be, right? We never know how deep the correction could be. But we do know that if the daily is expected to be corrective cycle, 4 hour could be any kind of cycle here after that retrace and continuation, right? It also could, of course, dance within the range. It doesn't matter because our plan is now bearish. So the rallies. So what started from the short-term rallies on the previous week becomes a long-term rallies after the break of this structure. So no, we did not have any convergence on the 4 hour. Well, we do now. Everything started from the 1 hour, and that's why it started as a short term, which of course expanded to the longer term after the confirmation of the longer term structure. Once again, the flow of the things. We never know when it will hit for the long term, never. Because think about it, how many signs we got already from here? Here and here and here and here and then here again. A lot of signs, a lot of possibilities, right? So that's why you always want to be careful, always want to be careful. And remember, short term has to be respected as a short term. It will become long term only once your structure confirms. Because we had the same idea here. But then it stopped after the two waves and a bullish divergence. It stopped and took us for a new high. So yes, by ideal we were aiming 102, 103. It missed a bit, but you know, as we always say, Mr. Market, not Mr. Perfect. It's a living organism, right? Or how do you say organism in English, right? Well, money in the pocket, Matthew. can't get bad, right? You always can bring in closed part on retraces with the next bearish setup. On the go. As you go and you get in confirmed direction new setup, there is no reason why not to bring in cashed profits. Of course, if you get a setup. So that's the dollar franc, bearish it is. Dollar versus the Canadian. We are bullish for the long term. We are still expecting it towards 136, 137. On the short term view, we are for sells. Why? Because the daily has the bearish divergence and 4 hour is a triple cycle. So we expect 2 waves or a range. So on the short term dollar CAD, we expect some fight here. So short-term sell rallies could be a good idea. For long term, we do want these 2 waves to happen and buy, or this range to happen, and then buy the bottoms of the range once each of the legs will be confirmed as a cycle. So dollar CAD long term is bullish. Short term, we are in acceptable place for the sell the rallies. Daily is bearish divergence, 4 hour confirming to be the cycle. That's all. Questions about that dollar pairs, guys? Now you excuse me, guys, for 1 minute, please, just to bring some water, okay? Great, I am back. Okay, so let's continue then. Where is the Pacific pairs? Aussie, Kiwi, and all the surrounding. Aussie versus the dollar, bullish. Fact, bottom line. How do we trade that and why do we trade that? Weekly is a double cycle. Each of these legs is a cycle by itself on a daily chart, triple cycle. Daily had a convergence. Daily should be corrective cycle. So daily should be clear to waves. And remember, based on the weekly, we are aiming the 50%, or at least the 38.2. So it still has the room. So daily could be 2 waves, or that's a possibility, it will be blocked as a range. It does not change the fact that we are after buys. If the daily is now developing the cycle, which is 2 waves, then each of the legs has to be cycled by itself. First leg is a cycle. We spoke about it already, right? This is a triple cycle. Now the second one should become a cycle by itself, and currently it's not. Why it's not? Because it doesn't have. Hold on, let me just make sure I'm not mistaken here. No, it doesn't. It does not have any divergence here. So the bottom line is Aussie dollar is still bullish. We are after buys. Retraces down with a bullish setup, and Aussie dollar should continue higher. Okay, so Aussie dollar buy retraces. Aussie versus the franc. Here we go. So our idea was to look for sells. Previous week we did not get it. Now just want to remind you why we are in the sells here for the short term, because of this 161.8. We confirmed each of the daily legs to be cycled by itself. The first one was a triple cycle, and the second one was a special cycle, right? Then the top we confirmed with false breaks. Now, why can we here go to 1 hour chart? Because 4 hour chart confirms each of the daily legs. So 4-hour chart is a cycle by itself. So we can go to one lower time frames to confirm the reversal. We got the false breaks and finally got the break of this area. This becomes a lower low, and that's where the cells are activated. So the Aussie franc was and remains bearish. Now it's finally activated. So as long as this top holds and with the daily divergence, 4 hours should be corrective cycle, meaning we could get 1, 2, or we could play here in a range. It doesn't change any of the plan. The plan is bearish, sell the rallies. Next one on the list, Aussie versus the CAD. Now, for the short term, once again, we are looking for the sells. The idea here is not the daily cycle, but the weekly cycle, because daily doesn't have any divergence. So we start from the weekly. Weekly is still bullish, possibly creating bearish hidden divergence, but daily never created for us an ending divergence. So we can't trade here for long term yet. We are very short term and we are only based on the 4-hour chart. So basically this is what we have and this is what we face. Now, because we are against the weekly and the daily, we must get 2 false breaks on the 4-hour chart. So we have to validate the retrace on the 4-hour chart. Do you understand here, guys, why we cannot go to 1-hour chart yet? Because we're against the weekly and the daily. None of them have the divergences for us. On Aussie franc, we did have daily divergence. That's why we can confirm with 4-hour chart, and we go to the 1-hour chart, we can trade after we get the lower lows, right? Here we can't, because we are completely against the weekly and daily. Exactly the same opposite as we had with Euro Aussie and Euro Kiwi that we discussed before, right? Remember that, very important. 1-hour chart is never in a game before 4-hour has the okay for you. And that's one of the mistakes intraday traders do, especially those who trade 15 minutes or 5 minutes, completely ignoring the higher time frame. They see setup from 15 minutes or 5 minutes and, oh, here you go, I love it. But forgetting to validate they have the okay from higher time frame. Before you get the okay from higher time frame, this is irrelevant. Make sense? Okay? It's like, you know, when you prepare when you think about a dinner, but before you go to the grocery stores to get these ingredients, your dinner cannot be completed. So get these ingredients, right? Get this confirmation that you have these ingredients. Now you can start cooking, right? Same here. So once the 4-hour will complete the 2 false breaks, and we have this false break, and we might have this false break done. Once we complete the turnaround, and that could be the false break, or what else? 1, 2, and boom, breakout. Remember the principle of triple double, right? So this is basically the same principle of triple double, but the creation of the triple. Why? Because the 2 waves could be continuation unless it breaks down, and then it's possible becoming a triple double or special double, right? Extended. So Aussie versus the CAD. We are, after we get the validation, we are looking for short-term sells just to go for longer-term buys. Therefore, at the moment we get this correction, 2 waves or a range, which definitely could be a possibility. After that, bullish. Why? Because not the daily, not the weekly ended the rally for us. Make sense? That's all, guys. That's very simple, and that's all. Okay? So yes, we can talk about short-term sells. Definitely. But short-term. Once the 4-hour validated for us. 1 hour is irrelevant before that. So yes, theoretically, we can face this and this. Do you really want to find yourself fighting for that moves against the higher time frames? No, you don't. Because most of the times you will fight, you will be here here, or here. And it will catch you, or here somewhere. It will catch you not prepared. Don't forget it. So OZ CAD, short term, we accept for sales. We have to validate in the 4-hour chart. Longer term, buys. OZ versus the yen. Oh, where is that? Oh, here. OZ yen. Our weekly is bullish after the triple cycle. 1, 2, 3. So we are bullish here, meaning we can look for buys. So we require corrective cycle, 2 waves or a range. And on the short-term view, we do face here some double top and possible range with some bearish divergence pressure. 4-hour charts suggest each of the legs to be a cycle. This is a cycle. This is a structure of a cycle. Short-term retraces are acceptable for longer-term buys. So this could be 2 waves. This could become a range. And later we could go and look for these buys. OZN, bullish for the longer term. Short-term retraces are acceptable, of course, especially due to the fact this is a convergence, right? So corrective cycles are acceptable. Ideal scenario would be if we get this bullish hidden divergence within the period of a week or so. It would be ideal. So short-term retraces down are acceptable, longer term we are bullish. And the last one of the OZ is OZ versus the Kiwi. Here we go. So what do we have from this pair? Monthly is bullish for us. Why? Because we have here a special cycle. So we are within this range, or we can still expect 1, 2. So we are bullish, especially as long as this low holds. Weekly has to fit in. The problem with the weekly is it doesn't have cycle, it doesn't have divergence, and moreover, this structure of higher lows, higher highs is now being retesting. So maybe, who knows, it will try even to spike through. We do need to pay attention to this weekly possible cycle that brings us to the level of 103. Sorry, 104 here. Right? So we can play around this area. It could become a bullish divergence, and that could be the next further buy. Daily has to fit in this theory. Daily does. It has a cycle by itself. And even more than that, it has this divergence. So far, so good. Bullish it is. Now, to continue the buys, it has to break this trend line. Why? Because this is the corrective cycle currently. That's the only place where this divergence is created. Can we go lower to try and find an enter there? Of course, yes. Everything is synchronized, and daily now has a divergence. So we can do that if the 4-hour chart will become a cycle by itself. 4-hour chart does become a cycle by itself, right? Let me just go back to the daily, draw the leg. Right, and this is our 4-hour chart. So first leg and second leg. It has a divergence, everything is good, even the trend line is broken. The only problem, we still don't have higher highs. Why it's a problem? Because this is the most conservative setup. Do we require higher highs when we have everything synchronized? No, we don't. But we don't have everything synchronized because weekly still there's no bullish divergence for us, right? That's the missing factor. Therefore, we do keep that in mind. So we are still bullish here. That means once we get a bullish setup, we should be looking for buys because, of course, we have the cycle synchronized. But we have to keep in mind that first attempt might fail. And if that fails and we push lower, then we could push that slightly lower towards 105, 104. No problem with that. It doesn't change the picture. It will just change the timing for the next entry. That's all. So OZ Kiwi, we are bullish. We are after buys. Okay, it reached the 106 area that we have been accepting for short-term sales. We were talking about 106, 105. It's there. It's there. Is it smart to look for sales here, even if that's to push slightly lower? No, it's not. Now, that by ideal, we do want higher highs, or at least we want a structure of 1, 2, and breakout, right? We don't have it yet. Does that make it bad? No, it's not, because all the cycles are synchronized for buys. So even if the first attempt fails, it's still bullish. Even if the second attempt fails, it's still bullish, because once this monster will take place, it will skyrocket. Once it skyrockets, it could be the one that will provide amazing risk rewards. Remember the natural gas example. Remember the Aussie dollar example. Remember the Aussie yen example. Remember the Euro Aussie short and the Euro Kiwi short. When the monster is awake, it takes all the levels on the way, and that's where you get the risk reward, right? So same here. Aussie Kiwi, the bottom line is bullish. New Zealandian dollar, well, honestly, this pair is a mystery for me, and I will explain. According to the weekly cycles, we don't have the cycle because we can't use this area of the 100. We can't. Second leg is much longer than the first. That's the fact. So we could say still 161.8 in play. That also fits in the expectations from the monthly. If the monthly is making the double cycle, that should take us towards 61.8. That means here. So we can still get this scenario. This is still a possibility. Definitely. Right? However, after making the straight leg, we could be exposed to waves before the next sell portion. That's also a possibility. Of course it is. Right? So, assuming that, we check the weekly chart. The weekly fits in here as a possible triple and now double. Right? If that's the case, and we will have this trend line broken, then it might be the monthly two waves. But we're so far away from that. So far away from that. Now, what makes me here wondering about the sells, further sells? One thing, the fact that the daily had to be two-wave correction. So 1, 2, and continuation. Trendline breakout and continuation. That was the plan. That's why the idea was sell, sell, sell. Right? Instead of that, look what it does. Breakout, breakout. That means the corrections could be slightly bigger, so something like that. And from there, we will have to see. Is it about to make the new sell or about to make a new high? Don't know to say it right now because it changed slightly the direction and it doesn't have ending divergence here yet. Therefore, very likely this is what we should face. So New Zealandian dollar, as for now, is acceptable for both directions to be traded. Weekly is still divergence, meaning bullish divergence, meaning daily should become corrective cycle. Daily could become two waves or a range. It doesn't have two waves yet. Well, it does here, but it doesn't have a divergence, ending divergence. And it could be a range, which it already broke the highs. Therefore, the two waves could be slightly deeper, and that's why for longer run, it's simply invalidated scenario. We don't have the synchronization right now, and for short term, it could be traded in both directions. So we can go and mix up the 4-hour with the 1-hour chart and trade the short term views. Okay, so that's basically all. New Zealand dollar is acceptable for both directions. The way I see that, retraces to be for buys. New Zealandian versus the Canadian. Still bullish. Short-term corrections could happen, but the long-term, we do not have any signs against on weekly. We do not have any signs against on daily. Short-term corrections could happen, but exactly as the OZ versus the CAD. If we want to go against the weekly and daily, 4 hour must make the reversal. 4 hour doesn't have any reversal. So yeah, as for now, only short-term pullbacks. 2 waves or a range or drop with bullish hidden divergence just to go and attack the buy. So retraces are acceptable, could happen, but we use them as for buys. Okay, it is bullish. New Zealandian yen, also very bullish for us with the weekly cycle. We're in a big range, right? And on the same view, we are in these 2 waves, so we expect 1, 2. On the short term, we are bearish. The reason? This first leg is a cycle by itself. It's a special cycle on the 4 hour chart. 1, 2, 3. False break in play, false break in play, right? And we are building up now convergence, meaning we are for corrective cycle, 2 waves and buys or a range. So short term bearish, long term bullish. And that's all for the New Zealanders. 2 more pairs remain, CAD yen and CAD franc. Let's start with the CAD franc. Long term is very bullish for us. This is a triple cycle. We are from the monthly, meaning weekly has to fit in that theory. The problem with the weekly is that the last divergence that we have is bearish hidden. Still, after that moment, this is the last divergence. We expect the weekly to become a bullish divergence or daily to make a corrective cycle. From that bearish hidden divergence that we had, daily made a corrective cycle, which finished with a bullish divergence. Since then, we have a trendline breakout and higher highs. That makes it to be bullish. Invalidation area is right here. Therefore, as long as this low is holding, we are for buys. To buy that, we require bullish signs from the 4 hour chart, meaning 2 waves correction or a range. That was the last range that we've had, and that was the breakout, which failed. This is a failing opportunity, and the stop loss will be kicking right here. So now, what do? We're waiting for the next setup. It doesn't change any of the plans. It just changed the timing of the attack. And the next attack could be anything like that, or still this kind of confirmation. The next time it becomes a bullish divergence, we are looking again for trend line, reversals, and buys again. All that is relevant as long as we remain above the daily invalidation area. So we got a false break, that might be some kind of a range movement here. It doesn't change our plan because our plan was and remains bullish. Does it worth to look for short-term sells here? I would avoid it simply because of the higher time frames. I believe that these are the scenarios where the bulls can take the control any single moment they decide so. So short-term is neutral for me, long-term is bullish. And the first and the last attempt, that we got was basically the only attempt in that correction, and it failed. It was previous week and failed. Now we are waiting for the next one. The CAD versus the yen is our next pair, and here we are bearish. The idea is very simple. The last divergence from weekly is bearish hidden. Last divergence on the daily was bullish hidden. Once we get daily against the weekly, we are waiting for one of the 2 scenarios. Daily to become bearish again, or 4 hour to complete its cycle, corrective cycle. 4 hour completed the corrective cycle here. We confirmed it on the 1 hour chart. Trendline was broken, convergence was done. CAD yen is back to bearish. So we are bearish here until the daily would start to show some signs against again, and it's pretty much early, so we can see that 84.30 or 82.70 being reached. For us, it's bearish. Finito la commedia with the Forex. Any questions, guys? Once again, very important you understand why do we do this session this way. It has to be detailed. Preparation for the entire week, so we have an easy follow-up during the week. Okay? But it's important. You have exactly the clear picture, what should be followed. Okay? Well, that's a very general question, Catherine. When do we see the market starts to drop the volumes in December? Well, I myself stopped trading around 14, 15 of December. Normally the volumes go down 22, 23. They start to drop. The moves become more random, much more focused short term. I myself stopped 14, 15. Why to fight for last days, right? That's my personal view. So that's all. Basically, this year I'm already done, personally speaking, and that only thanks to the indices and the natural gas. Only these positions made me reach my full target, so I am completely covered. Will I enter new positions? No, I don't. I will not. I will manage my running positions. Knocking the wood, thankfully, they're all risk-free, of course. Well, again, knocking the wood, yeah? We have the Euro Aussie, Euro Kiwi, all these crosses. For next year, I have much bigger plans already for like pairs like Pound Kiwi, Pound Franc, for example, yeah? So this Aussie Kiwi, this could become the next monsters. And silver, which I will explain in a few minutes. Yeah, Catherine, exactly. It's natural gas and the indices. Indices are working beautifully, so very well covered. As I always say, patience pays off. You know, a week could be ugly, a month could be ugly, a quarter could be ugly. Who knows? It's trading at the end of the day, right? We're trading with statistics and against big money, so it's part of the game. But at the end of the day, you have your vision and your targets for the long term. You manage it correctly. It's enough to have one or two big winners to make your year sugar. So the next ones we have on the list, that's commodities. Quickly, let's go over them. Natural gas, unchanged, bullish. Okay, oil, bearish for the long term. Our reason is the weekly. We are bearish for the long term. For short term, we could be talking about retraces. Could we? Let's examine that. 4-hour chart has to make correction as per retraces. Does the 4-hour chart offer anywhere a structure of Fallsbacks and convergence or triple push? So 1, 2 breakout or 1, 2, 3 breakout. Does it offer it anywhere? The answer is no. So here we got the idea of possible retraces. We are waiting for higher highs, never got them. Here we got a possible higher highs, we never got them. Here we were looking for possible higher highs, we never got them. And here is the proof that to wish is not enough. We trade facts. If you get a fact, you can trade it. If you have a wish, you could easily become a fish and a food for the big money. Do not get fooled before you got the signs against, to prove your expectations. When you are against the higher time frames, you must remember that you are in aggressive market conditions. You are against the big money. If you are in aggressive market conditions, you have to be conservative in your actions. If you are in conservative market conditions, then you could become much more aggressive in your actions. But this is a great proof. You have an idea, validate it. And we couldn't validate it. And we are talking here 600 pips, even more, of a ride without any retrace. And we still don't have a retrace. So it is still bearish. As simple as that. And short-term retraces up would become acceptable only when the 4-hour chart would validate it. And I want you to remember that always when you trade it, guys. Always ask yourself the question, where do you stand compared to the higher time frames? And yes, even though it's very tempting, especially for the ego of the trader, to call successfully a low and the bottom, and then to go and to brag it in the chat or the forum, hey, I just gotta buy here and I catch it. Yes, but how many times did you fail it, right? So always ask yourself the questions. When you see that in forums, when you see that in blogs or wherever, right? You would always find these guys that brag, I just called the bottom. Yes, but how many times you failed to call it before? So I want you to remember that you don't want to to become a fish starting from your wish. You just validate. As simple as that. And for validations, there is very, very specific condition. False breaks and higher highs, or the structure of triple double, or the momentum retrace, right? Which we have the double, which breaks, right? That's all. We have nothing. So oil is bearish for the long term yet. Short term would become acceptable for the trades only when the 4-hour chart will have the structure for it. Will have that happen here or here? How can we know? How can we know? No one knows. Don't try to be the one to guess. Normally, it costs a lot of money. Gold and silver. So for me, it's still bearish, to be completely honest. And the reason for that is very simple. We do not have any weekly ending divergence. That's why I treat all this rally still as a bearish sign. Could that play here and make something like that with the divergence? Yeah, it could. But my view is still bearish. This current rally is pretty tricky because the weekly doesn't have the divergence, but the daily becomes a bullish hidden. If the daily is bullish hidden against the weekly, then 4-hour has to become corrective cycle. 4-hour chart is not a corrective cycle currently because it's one straight move and it's not even a range. So short-term rallies are acceptable. For longer term, I'm still bearish. Silver. Now this one becomes interesting. For long term here, I am ultra bullish, mainly because of this monthly. This is a rare situation, guys. It's rare. Once it becomes ready, and that could take many months. I'm not here to say when exactly it's going to hit, but once it does, that's what will happen. This is the next natural gas. When? I have no clue. I wish I knew. I have no clue. I don't believe anyone who said they have a clue. Weekly starts to build up a divergence. And I say starts to build up a divergence because we do not have yet any retrace to start higher highs. Any trendline breakout, any higher highs, nothing. And the daily does not have ending cycle on that part, which again makes it tricky. So no higher highs, yes, false break, no trendline breakout, no ending divergence on daily could provide a new low, right? So the fact is currently we are facing a false break, which means also divergence. So the 4-hour could become corrective cycle, which means possibly two waves. We don't have that yet, so short-term rallies are acceptable. For long-term, still not enough confirmations. By ideal, and I repeat, by ideal, this is what should happen. If that happens, that's a monster call. Will that happen? Don't know. Currently, short-term rallies are acceptable, longer term still remains bearish. This is a fact. Sugar and coffee. Let's take a look on the coffee. Our plan is bullish. Weekly is bullish cycle, so we expect daily to be corrective cycle. So 1, 2. We have one. Now bullish hidden divergence. We are looking for the buys. This is the current trend line. Broken, bullish. Okay, so following that up. Sugar, same story. We are after the buys here. The current trend line is this. The daily is a bullish hidden divergence. The only thing I like a bit less about the sugar than the coffee, that it was two waves push with a bearish divergence here. So there is a chance that this is just a correction before some deeper move down. For me, it's still bullish, but we have to keep it in mind. And according to weekly special cycle, maybe we are going just to face a range. So false break, and move inside the range. That's also a possibility, right? And that's why the way I see that, the best is to get the daily corrective cycle. Daily is currently one cycle, and that's why what makes it tricky. So instead of just waiting for trend line, which we can see has hard time to gain momentum, right? Because most of the times it's simply enough, but we can see it has hard time to gain the momentum. So the best thing is double confirmation in that case. The idea is not that it's wrong, but the fact that weekly could become a range makes all this approach attack a bullish hidden divergence trickier. And that's what was the best thing to do. Get the higher highs, get the setup on the retrace, and buy. Because otherwise it could simply do triple, double or a range, and one more push lower. It's a possibility inside the weekly range. That's why in such cases where we can see that for 2 weeks there is no momentum gain, we have to listen to the market. Maybe the big money is not inside. And if the big money is not inside, we have to be careful. And this is why I show you this approach. Double confirmation. Bullish, looking for buy setups. Never on the 1 hour chart yet, because everything derives from the weekly and the daily combo. 4 hour is the lowest we can go. Remember that. Never 1 hour. Never. And indices, we are bearish, and this plan is unchanged. So first leg was in play, now it's building up the second. This should become here somewhere a divergence. Where exactly? No clue. No idea, but we can see it's forming. It will make a stoppage. When exactly? We don't know. We don't want to bet on that. So currently we are still bearish. Same with the German DAX, of course, which I expect to reach 10,000. Why 10,000? Because of the monthly first target. This is even slightly lower than the 10,000, and of course the weekly expansion. The weekly expansion suggests us 161.8 around the 10,000 here. So we're bearish. Our plan doesn't change. Now we can go and talk about all the indices, but they are all pretty much the same. As per cryptos, I myself currently have nothing. The momentum there is hardly bearish, so it's now on a neutral mode for me. The previous week buy ideas failed, so definitely no rush to create any new ones. Waiting for that to happen. We have 2 stocks in the play. One of them is the Deutsche Bank, which is an invest for the long term, based on the monthly and the weekly cycles. This is what we are talking about, the monthly triple and the weekly triple by itself. So this is an invest. And we have the Vivendi with its triangle, which we are still waiting for a direction. Personally, I think we are heading down, only because the higher time frame, monthly, we got 2 waves here, 2 big waves. So I would expect something like that. So for me, it's more chances for the sales. I might be wrong, of course. So we're still in the triangle, so still waiting for the clear sign. And that's all, guys. That's all we have for the beginning of this week. Questions? If there are, please write it down. Meanwhile, I just want to thank you for your focus, your attention. I know it's a long session, guys, so thank you very much. Appreciate it. I just want to go detailed as much as possible and explain everything as easy as possible. So I hope I delivered. Catherine, good luck with your traveling. Enjoy. And good night for all those of you who are going to sleep, guys. Once again, thank you for being here. I'm going to work on the report soon. You'll get it once it's ready. Thank you very much for being here, guys. I wish you a wonderful week. I'll catch you in the Telegram later. Thank you. Take care. Bye-bye.